Welcome back to Explain the Charts, where we dive deep into the forces driving market movements. Today, December 5th, 2025, we're putting the spotlight on QQQ, the ETF tracking the tech-heavy Nasdaq 100, which continues to be a central focus for investors. Recent market sentiment suggests QQQ is in a phase of grinding higher, yet analysts caution about the underlying thin, low-volume rally that makes it particularly susceptible to reversals. We'll explore these dynamics by first dissecting the latest news and then meticulously examining the candlestick data across multiple timeframes. The macroeconomic landscape is undeniably contributing to this cautious optimism, with signals of economic uncertainty becoming more pronounced. A significant factor highlighted in recent news is a disappointing ADP jobs report, revealing a surprising fall of 32,000 private sector jobs last month. This unexpected contraction injects greater uncertainty into the health of the labor market and, consequently, into the Federal Reserve's future monetary policy decisions. Traders are eagerly awaiting upcoming U.S. economic data, such as ISM Services PMI, ADP payrolls, and PCE inflation, as these will heavily influence the Fed's stance on interest rates. This environment of data dependency suggests that QQQ's trajectory will likely remain sensitive to economic releases. Beyond the macro picture, individual stock performance within QQQ's portfolio paints a mixed and influential story. On one hand, the persistent enthusiasm surrounding artificial intelligence continues to be a powerful tailwind, with chipmaker NVIDIA frequently cited as leading tech sentiment and maintaining its buy ratings from major banks. Companies like Marvell Technology are also making strategic moves to enhance their AI capabilities, signaling continued growth in this sector. However, this bullish AI narrative is counterbalanced by warnings of reversal risks for other megacap components such as Amazon, AMD, and Tesla, where momentum appears to be fading. Netflix also experienced a notable downturn after its founder sold a substantial amount of shares, demonstrating how company-specific news can trigger broader sector-wide anxieties, collectively impacting QQQ's overall performance. Let's now turn our attention to the QQQ one-day chart to gain a comprehensive understanding of its longer-term price action and identify key structural trends. Observing the period from mid-2024 through late 2025, QQQ has predominantly exhibited an upward trajectory, reflecting the underlying strength of the tech sector. However, this growth hasn't been linear. The chart reveals distinct periods of significant corrections, notably in August and September of 2024, and a more pronounced downturn in early April of 2025. These pullbacks underscore the inherent volatility of the market and the importance of identifying robust support and resistance zones. Following a sharp decline that saw QQQ bottom out around $402.39 in early April 2025, the ETF embarked on a strong recovery, establishing a clear and sustained uptrend. This impressive rally culminated in QQQ reaching a new multi-year high of approximately $637.01 on October 29, 2025, marking a significant milestone. However, the subsequent price action through November showed that this peak became a formidable resistance level. Despite multiple attempts, QQQ struggled to achieve a decisive breakout above this $635 to $637 zone, hinting at strong selling pressure at these elevated valuations. This struggle highlights a critical juncture for long-term bullish continuation. A particularly striking event on the daily chart occurred on November 20, 2025, when QQQ experienced a sharp single-day decline, dropping dramatically from intraday highs around $614 to a low of $584.75. This sudden and substantial reversal aligns precisely with news reports from that week, which discussed how the U.S. stocks rally reversed in response to investors digesting a September jobs data surprise and mixed reactions to key earnings reports. The confluence of economic data and corporate news clearly triggered a swift reevaluation of market expectations, leading to pronounced selling pressure. While QQQ quickly found support and began to recover, This event serves as a potent reminder of the market's sensitivity to both macro and micro catalysts. To understand the immediate aftermath of that significant November 20th reversal, we need to zoom in on the 1-hour chart. Focusing on the candlesticks between 1763647200000 and 1763672400000, which encompasses the primary trading hours of that tumultuous day, we can see the sheer force of the selling wave. Each successive hourly candle closed lower, often with elevated trading volume, indicating strong conviction from sellers and a rapid breakdown of prior support. This aggressive price action on increased volume is a textbook example of a bearish momentum shift, liquidating positions and triggering stop losses across the board. Following the sharp sell-off on November 20th, the hourly chart reveals that QQQ quickly found a floor around the $584 to $585 range, forming a temporary area of demand. This level acted as a bounce zone, allowing the ETF to stage a respectable recovery over the subsequent trading sessions. However, the upward momentum after this bounce was not strong enough to reclaim all the lost ground, and previous breakdown levels began to act as new resistance. The market then entered a period of consolidation, suggesting a rebalancing of supply and demand as investors assessed the future direction after such a volatile move. Now, let's examine the very recent price action using the 15-minute chart, specifically tracking QQQ's performance from December 1st to December 2nd. During this two-day period, QQQ largely consolidated within a defined range, primarily fluctuating between $617 and $623. This tight trading band, characterized by relatively lower volume compared to prior volatile periods, suggests a phase of indecision and accumulation or distribution without a clear directional bias. Neither buyers nor sellers managed to gain a decisive advantage, resulting in choppy, sideways movement as the market awaited fresh catalysts. Expanding our short-term view to include December 3rd and 4th on the 15-minute chart, from timestamp 1764751800000 to 1764892200000, we observe a continuation of this volatile, range-bound behavior, albeit with increased intraday swings. On December 4th, QQQ made attempts to push higher, reaching a peak of $624.79, but each rally was met with renewed selling pressure, preventing a sustained breakout. The subsequent pullbacks kept the price anchored within a broader consolidation, unable to decisively clear resistance. This fluctuating price action, without establishing strong momentum in either direction, perfectly embodies the meandering amid signals of economic uncertainty sentiment widely reported in the news. A particularly interesting point on the 15-minute chart for December 4th, 2025, occurred around 14:05 Universal Time Coordinated. Here, QQQ saw a quick drop from $624.79 around 14:05 Universal Time Coordinated to $621.46 by 14:20 Universal Time Coordinated, a notable drop. This precise intraday weakness directly aligns with the live market snapshot from our news feed, which indicated the Nasdaq 100 index was down 0.1% as of December 4th, 2025, 1 p.m. Pacific Standard Time, 2100 hours Universal Time Coordinated. This demonstrates a direct correlation between real-time news and immediate price reactions, highlighting the sensitivity of QQQ to daily market sentiment. The market then spent the remainder of the day oscillating, recovering some ground but failing to reclaim the earlier intraday highs, ending near the day's mid-range, reflecting persistent pressure. Recapping our observations, the long-term outlook for QQQ, as seen on the daily chart, still points to a general uptrend, provided it holds above critical support. The crucial support level to watch now is the $580 to $585 zone, particularly the low established during the significant drop on November 20th, 2025. A sustained break below this could signal a deeper correction and a potential reversal of the larger uptrend. Conversely, The formidable resistance at the October 2025 high of $635 to $637 remains the key overhead barrier. A decisive breach of this level, ideally on strong volume, would be a robust bullish confirmation, opening the path to new all-time highs for QQQ. The journey to either outcome will be heavily influenced by future economic data and the performance of key tech constituents. For the immediate future, in the short to medium term, QQQ is likely to experience continued volatility and potentially remain range-bound. Based on the hourly and 15-minute charts, we project a trading range roughly between the recent support at $617 and the intraday resistance around $624 to $625. A sustained move above $625, perhaps fueled by positive economic surprises or strong tech earnings, could quickly see QQQ challenging the psychological $630 level and then the ultimate $637 resistance. Conversely, a break below $617, possibly triggered by negative macroeconomic news or further weakness in megacap tech, might lead to a retest of the $610 zone, with the $585 level as the ultimate defense. The likelihood of a breakout or breakdown is currently balanced, roughly 50-50, as mixed signals dominate the market. Traders should monitor upcoming Federal Reserve speeches, the broader employment reports, and any significant news from bellwether AI-related stocks for the next clear directional cue. Before we conclude this analysis, please remember that all the information presented here by Explain the Charts is strictly for educational and analytical purposes. It does not constitute financial advice, and you should always conduct your own comprehensive research and consult with a qualified financial advisor before making any investment decisions. Investing in the stock market involves significant risks, and there is no guarantee that past performance will be indicative of future results. Always invest wisely and within your risk tolerance.